This is a presentation to inform you about tax strategies that may help keep your money in your pocket. This presentation will cover some, but not all, of the strategies available. You must be willing to work at this at least 4 hours weekly, follow instructions, and document your activity. If you are not willing to work at least 4 hours weekly, follow instructions, and document your activity, then now is a good time to stop this presentation and do something else. My name is Ted Correns. I am not a paid tax professional. I was at one time, but my career interests changed and knowing all the rules took too much time. Instead, I focused my interest in research to a specific area, and that's what this presentation is about. To support this presentation, my research included IRS publications, books written by former IRS personnel, and other recognized tax information providers. Very briefly about me, I've owned and operated 8 small businesses during my career. I've managed the financial resources for 3 multi-million-dollar enterprises, the largest of which was $200 million a year, and I was a consultant to small businesses. Most of my success came from helping others to succeed. These are the topics I will discuss. There are more tax strategy options available, but to keep this presentation brief, I limited my presentation to these 5. We are presented with many choices during our lifetime, and at the end of this presentation you will be asked to make a choice. You can continue with what you are doing and continue to pay more income taxes than you are required to, or you can make a change in how you spend a few hours of your time and significantly reduce the amount of income taxes you pay. My main point is, if you do something anyway, why not make it tax deductible? We do need to pay taxes, but how much is too much? President Roosevelt makes a good point. This was his perspective. Here's an interesting perspective from another president, President Reagan. President Reagan defines the taxpayer. He says, we all work for the federal government. Have you ever reviewed how much you pay in taxes each year? Here's a generic example for someone with a job. Your percentages for some of these may be higher or lower. But if you think this is bad, you haven't seen anything yet. Your taxes are going to increase. Our governments, federal, state, county, and city, are all in financial trouble. Who do you think they want to bail them out? They want us to bail them out. Those percentages you see on the chart have already started to increase. And in 2011, the federal income tax rates are going up. It's good that you are watching this video because you need to take defensive action right now. This first topic deals with your automobile. What an incredible benefit our elected representatives gave us. We put about 27,000 miles on our vehicles in 2009, and 13,500 of that was business related. That reduced our taxable income by $6,750. Many of those deductible miles were miles I would have driven anyway. If you had done this, multiply the $6,750 by your tax rate to determine how much you could have reduced your income taxes. For example, if you were in the 10% bracket, you could have saved $675. Most of converting the mileage from personal use to business use comes from changing how you think. For example, when I go pick up office supplies, I also go to the grocery store next door. When I deposit a business check, I go to the grocery store as well. That makes these trips to the grocery store tax deductible. We have family 75 miles away. Not all the time, but frequently we need to meet with or deliver product to prospects, business associates, or attend a business or training meeting in that area. We always ensure we visit family after we perform the business requirement. Most people know that mileage commuting to and from a job is not tax deductible. But if you make a slight change in what you do, those miles can become tax deductible as well. You just need to know how to do it. Your tax deductions can be based upon actual cost to operate your vehicle or based upon the IRS mileage rate. Use whichever is more beneficial to you. Even though you use the IRS mileage rate, you may still deduct the business portion of the automobile finance costs, taxes, and any tolls. It is critical you follow the documentation rules or you will lose the deduction. What an opportunity to give money to your spouse, parents, siblings, children, or grandchildren. For the past few years, we gifted our parents with a monthly amount. It was not tax deductible because it was a gift. We registered with the IRS for payroll purposes. hired our family members to provide a variety of advisory services or business tasks, and now the monthly amount is a before-tax expense instead of a gift. Our family members provide us with leads, language translation, they critique our procedures, perform administrative support, and so forth. Hiring your spouse opens up many business-related deductions. It is critical you follow the documentation rules, or you may lose the deduction. I was able to create a self-insured medical reimbursement program by putting family members on the payroll. They all serve part-time in different categories. Because my wife is my employee, this allows me to pay employee medical costs that are not reimbursed by other means. Normally, the 7.5% exclusion on the Schedule A means most or all of our medical expenses would not be tax deductible. Using the self-insured medical reimbursement strategy, all the medical expenses are deductible from before-tax income. It is critical you follow the documentation rules, or you may lose this deduction. Here's another category of deductions I can't believe our government authorized, but they did. If you know what the rules are, you may be able to deduct a portion of your golf, tennis, fishing, hunting, theater, season tickets, or other fun activities. It depends on whether you do this in association with a qualifying activity. If you know what the rules are, you may be able to deduct a portion of your golf, tennis, fishing, hunting, theater, season tickets, or other fun activities. It is critical you follow the documentation rules, or you may lose the deduction. We have family, some as far as 1,600 miles away. Fortunately, we have business events and business associates located en route and at the final destination as well. So when we go to a business training function, schedule a recruitment meeting, or schedule a training function for our associates, we may visit family en route as well as at the final destination. With proper planning on the number of business days versus non-business days, we may deduct all travel expenses and some of our lodging and meals based on the ratio of business and non-business days. Vacation time may be included, and the travel may be tax deductible, and a portion of the lodging and meals may be deductible based upon the ratio of business and non-business days. This one I really like. You may have a lake home you travel to, kids in college in another town or state, relatives in another state, or a winter home where you go to golf. Or you may do seasonal travel in a motorhome or car. Those trips may be tax deductible if properly planned ahead of time. Imagine that, writing off the miles going to your lake home. Doesn't that sound great? Or how about visiting your kid in Alaska? It is critical you follow the documentation rules, or you may lose this deduction. During this presentation, I've advised you of a wide variety of expenses you spend money on every day, and I've indicated you may be able to convert these to tax-deductible expenses. In some cases, I've given you an idea of how to do it. First, to implement these tax-saving strategies, you need to have a home-based business. That is the action you must take in order to have these tax-saving strategies become available to you. There are a variety of home-based businesses that are available, and you must make a choice on which you prefer. If you decide you do not want to start a home-based business, that's okay. You have my blessings for taking on more than your share of the taxpayer load. Thank you very much. I intend to only pay what I must pay so that none of my money goes for the bridge to nowhere or bailing out overpaid financial executives. Before I get into this one, I want to thank you for taking the time to watch this video. You are here either because a friend recommended the video to you, I recommended it, or you are responding to my ad saying this tax strategy information was available. Here's your second choice. You may choose to be in the same host-based business with your friend or with me. If you do, it will cost $35 to get a startup kit. You need to subscribe to our training program, $34.95 a month. You need to commit to working at least 4 hours weekly. And you need to try the product to learn how it makes you feel. There is a 30-day, 100% satisfaction, guaranteed product refund policy, no questions asked, so your initial product purchase is risk-free. You don't need to carry an inventory or create a marketing program because Zango provides these and many other services for you. After you join us, you will be provided with a link that will provide you with samples of the tax saving strategy documents you need to use, guidance on specific actions to do immediately and what to do later, suggestions on how to comply with the IRS documentation rules, product information, and assistance to help you start earning income immediately. Or, if you choose to participate in some other home-based business venture, that's okay. If you do, you will discover that most involve a large startup cost, a lot more than the Zango $35. Many will require thousands of dollars up front before you are actually in business. A friend of mine joined a home-based business that required a $2,000 startup. Many require you to acquire and maintain inventory, create your own marketing strategies, and rely on income based upon you selling your product one sale at a time. You will discover that it takes a lot of hours to be successful. You have my sincere best wishes for your success with whatever that venture is, but you will have to do your own research on the tax rules and develop your own business documentation. Life is about choices, and it's your choice. I recommend you choose the Zango home-based business. If a friend recommended this presentation, call the friend and ask your friend to help you join the Zango home-based business. Otherwise, call me at 800-206-3934, extension 8311. When I was growing up, Arthur Godfrey was a popular entertainer. I like his perspective on taxes. He said, "I am proud to be paying taxes in the United States. The only thing is, I could be just as proud for half the money." It's up to you to decide whether to pay those income taxes or keep that money for yourself. Almost everyone with a job falls within this range of savings. Think about what you could do with an extra $2,000 to $10,000 every year. If you're wondering where you will get the money to start this new home-based business, it's really easy. Let the IRS fund you with that $2,000 to $10,000 in savings. The next time you go to work, change your W-4 so your taxes withheld are reduced by $250 a month. This will help you start your Zango home-based business. The sooner you start, the sooner you will be able to convert day-to-day expenses into tax deductions. Every day that you delay starting a home-based business is like throwing money out the window. Money that you could have given to your spouse, a child, a grandchild, or to your favorite charity. If you are ready to reduce your income taxes immediately and start earning income, go to corinst.mymangosteen.com and click on Join. Then read the suggestions and click Join Zango now. For more information, call me, 800-206-3934, extension 8311.